This week, SpaceX plans to fly Starship again, and the internet will watch a rocket the size of a skyscraper leave the planet. I want to talk about a different number: $116 billion. That's how much SpaceX stock is about to become sellable for the first time ever in 15 days. The most hyped stock in America is about to run the oldest experiment in markets. What happens to a price when the people holding it are finally allowed to sell? Okay, the setup. SpaceX went public as the most anticipated listing in a generation. The rockets land themselves. Starlink beams internet from orbit. It's run by the world's richest person. For years, regular investors begged for a way in, and when the listing finally came, the demand was enormous. Everyone wanted a piece of the company that owns space. And on the 4th of August, it reports earnings to the public for the very first time. That's the part everyone is excited about. It is not the part that matters. And the hype machine is running at full power. A Starship flight planned within days of the earnings report. Analysts writing about the space economy. The stock is one of the most talked about tickers in America. Every headline is about rockets, and rockets are genuinely spectacular, which is exactly why almost nobody is reading the boring paragraph in the listing documents, the one about the lockup. Except, here's the thing the rocket coverage skips. Before a single insider has been allowed to sell one share, SpaceX stock has already slipped below the price it listed at. All that demand, all that hype, and the price is underwater on pure public market enthusiasm alone. Hold that thought, because the supply side of this story hasn't even started yet. Now the mechanism, in plain English. When a company goes public, the insiders, the founders, the employees, the early funds are locked up. Usually for months, they are legally banned from selling. Why? Because if they could all sell on day one, the flood of shares would crush the price. So the market you've been watching is artificial in one specific way. You've seen all of the demand for SpaceX and almost none of the supply. Price is set by the marginal seller, and for the stock's entire public life, the marginal seller has been in handcuffs. On August 6th, the handcuffs start coming off. And think about who is being unlocked. These are not day traders. They are early employees and venture funds that bought in privately over a decade, when the company was worth a tiny fraction of what it's worth now. Many of them are sitting on life-changing, fun-making gains, and they have never had a liquid market to take even a slice of them. Ever. This is their first exit in history. You don't need them to be pessimistic about rockets to expect some of them to sell. You just need them to be human. So here's the math, side by side. On August 6th, roughly 911 million shares, worth about $116 billion, begin unlocking. And by the end of the year, the tradable share count goes from 639 million to 5.33 billion. Read that again. The supply of sellable SpaceX stock multiplies by more than 7 inside 5 months. Demand would have to grow just as fast, just to keep the price standing still. Now, let me argue against myself, because supply math is not destiny. 3 honest outs. 1. There's a trigger clause. If the stock prints $175.50 on 5 of the 10 sessions before earnings, another 455 million shares unlock early. The market knows this, and prices that are known in advance are often absorbed in advance. 2. Insiders who believe the story don't sell, and nobody believes the story like this company's insiders. If earnings on August 4th are spectacular, demand can genuinely swamp new supply. And 3. Great companies have survived brutal unlocks before. Supply pressure sets the temporary price. The business sets the eventual one. So no, this is not a prediction that SpaceX crashes. It's an observation that for the first time, the price has to answer to sellers as well as buyers. So here's my call, on the record, so you can hold me to it. The trigger clause does not activate. The stock does not print 175.50 on 5 of the 10 sessions before the August 4th earnings, and that conditional tranche of 455 million shares stays locked at the report. If the trigger fires, I'm wrong, and I'll say so right here. And whatever happens, watch the tape in the days around August 6th the way you'd watch a science experiment, because that's what it is. The purest test of supply and demand this market has run in years, on the most famous stock in the world. Here's what I'd take away. The rockets are real. The company is extraordinary. And none of that is the question. The question is what any price does when supply multiplies by 7 while everyone's staring at the sky. Great company, great rockets, 7 times the shares. All of those can be true at once. Earl's full daily brief is on the channel with tonight's big technology earnings, the oil spike, and the crypto bills 2-day fuse. I'm Frankie, the asymmetric signal. One contrarian read a day. Subscribe.